Good morning, my dear friends. It's my pleasure to welcome you all to the 81st webinar organized by AABN. Your presence here reiterates the fact that you're keen on spending time meaningfully even on the weekend. I truly appreciate that. As you are all aware, AABN has been engaging you with lively sessions with the objective of helping you hit the refresh button on emerging trends on a range of topics. This Sunday too, you would be delighted to know that we have an eminent guest speaker, Ms. Rajalakshmi Venkatachalam, to address GST reforms, challenges, and compliances. AABN has always strived hard to provide up-to-date information and developments that are of interest to you and have wider economic implications for the country and the world. Your encouragement and constant feedback on how to improve our webinars have only made our resolve and commitment to these ideals stronger. These webinar series are designed to help aspiring entrepreneurs visualize the possibilities, identify resources to support their vision, and understand the logistics of starting a business. Many of our alumni have supplemented with real-life entrepreneurial stories. The unique and large-scale disruptions to the economic environment caused by COVID-19 has severely affected revenues and profits across industry sectors and businesses. Cash flow constraints caused by lower sales and recoveries have led to new business strategies aimed at conserving cash and resources and even renegotiation of agreements. A declared pandemic, multiple rounds of government-injected stimulus packages have completely changed the way we currently do business. Only 3 years ago, we were just beginning a conversation about major tax reform. Now, many of those historical tax changes have been rolled back or deferred. Every new year brings new cataclysmic events that are even more changes in store than usual. Businesses are increasingly talking about their commitment to sustainability. Interest in the tax is becoming part of the story, encouraged by the introduction of tax sustainability measures. Communicating on taxes is challenging as it's both complex and emotive, particularly at a time of significant uncertainty. What should your organization be thinking about now? With the end of the transition period, our expert today provides a perspective on the GST considerations, practical tips on preparing ahead. On this webinar today, we have with us Ms. Rajalakshmi Venkatachalam to discuss her insights in GST, taxes, bill of supply, provisional invoice and GST time for invoice issue, debit and credit note, advance receipt, refund voucher in GST, IGST claim, import of goods, etc. Friends, put your hands together for Ms. Rajalakshmi Venkatachalam. I have the privilege of introducing Rajalakshmi is a consultant chartered accountant with experience in excess of 16 years, practice based in Chennai. A member of the Institute of India with professional experience in statutory audit, tax audit, accounting, GST, ITR filing, tax planning, TDS return filing, etc. Rajalakshmi is focusing on advisory services and litigation services in the GST law. She's a visiting faculty in the Institute of Chartered Accountants of India. She creates awareness and updates the latest changes in GST law. She is a corporate trainer on taxation, having vast experience in setting up a business in India and guiding companies in corporate companies. Before I wind up, let me once again very warm welcome to all and reiterate that our doors are always open to those who might want to strengthen our work with their suggestions. I also wish to place on record our commitment to work tirelessly as a team to carry forward our goals in a constructive, gratifying way. Thank you all. Over to you, Ms. Rajalakshmi.
Thank you, sir, for a nice introduction and an excellent opportunity provided to me. And also, all the participants being assembled today, being on Sunday. Let us make this program more meaningful and useful to all the users. So with this small introduction, let me just start my presentation. Let me just a small story.
Gopi, video is not shared, Bilwar.
See, this Maasai man, they are the tribes from Kenya. They are very, very brave, and they kill lion with their spear. There's one occasion where this Maasai wanting to kill a lion, and from morning he has been searching for a lion in the forest. Till evening, he could not find any lion. Simultaneously, the lion is also was feeling very hungry and looking for a prey. And in the evening, they both met. So, 1 minute. Are you all able to see this slide? Is it visible?
Yeah.
Yes.
Yeah, the slide is visible. Please continue.
Yeah,
Okay.
eligible.
Sorry. Okay, somebody was saying that it is not visible. So what happened is in the evening, so both met and they wanted to try their luck. In a fraction of a second, they missed the target. Actually, there is an ethics that once the lion missed the target, it will not again hunt the same person. So similarly, this person, Masai, is also doesn't wanted to again make an attempt. So they made both and agreed that they will come back tomorrow, the next day, and then try. So that day night, this Masai man was making a practice, vigorously making a practice that he is wanting to hit the lion within the 10 feet distance. And suddenly, there was some sound is coming from the next compound. So he was peeping the other side and surprised to see that the lion is also practicing on the other side, that how to hit a person within the distance of 10 feet. How does this story relevant to our today's topic, GST? Like a Maasai man, we are also planning as a businessman and then augment the revenue, at the same time comply with the law, avoid the penalties, and get maximum input tax credit so that you will reduce the cost and earn a maximum profit. But don't forget, like a lion, there are people inside the GST authorities. They are also planning and they are also collecting documents and informations and then find out where the revenue leakages are and trying to find and collect, augment the revenue of the government. So with this small story, let me just get into the topics, today's topic. Today we are going to see more relevant to our records and the importance of records and returns. How one must be very careful maintaining their records so that they can avoid any penalties or tax liabilities in the future period. In today's agenda, we are going to see what are all the record one must keep and how long a person must keep the records. Is it for 5 years, 4 years or 10 years? and what are all the documentations requirement, and how serious people are not. I have personally seen that people are not giving an importance for documentation with reference to a merchant export. And then we are going to see another important document with reference to an LET, letter of undertaking, when it has to be filed, how it has to be filed, why it is relevant, that also we will see. And also we will get some clarity today on some of the burning issues faced by business entities. And finally, there are a lot of, you might have seen, many of you sitting here also might have received notices from GST authorities now. There are a lot of stereotype notices have been served left and right. So how to handle such notices? So these are the today's topic. And if you have any doubts or clarifications to be asked in between, you can either unmute and then ask, or if the doubt or clarification is not relating to this particular documentation related, let us have a discussion at the end during a question answer. Any issues relating to a documentation, you can stop me and then ask. Now, before we get into the topic, let us hear some noise. Background noise is coming. Kindly mute. See, recently RBI has done a detailed analysis of impact of a COVID, and they released a publication called Scars of the Pandemic, and in which they have estimated the output loss due to a COVID is around 52 lakh crores. And RBI expects that it will take a minimum 12 years for India to recover such huge losses. They estimate that they can overcome only in the year 2034 and 35 by taking into account 7% growth rate. On the other side, GST collection every year, it grows in multifold. If you see the last year collection for the year ending 21 and 22, the total collection was 14.8 lakh crore, which was 30% more than the collections during the year 21. The government is able to achieve this by a robust mechanism and automations and GST compliances by way of a GST portal and other provisions. Now, when we talk about the documentation related, I am not going to tell you the various provisions in the sections and the rules, because that will again it will make you boredom, because I will just highlight what are all the various provisions under which the documentations have been dealt with, and then we will slowly get into the practical issues. When I say documents, there are two sections, section 31 and 34 and rule 56 of CGST Act, talking about the documents. What are all the documents a businessman is supposed to maintain, and at what level, and what is the time frequency at which the documents have to be issued. For example, if a person is supplying of a goods today, they cannot issue a invoice tomorrow. The invoice has to go along with the goods. Whereas in case a person is rendering of a service, the service can be rendered today, but invoice can be given within 30 days. So there are list of documents which need to be maintained or issued by a business entities, and also what is the time limit within which these documents have to be issued have been dealt in section 31 and 34. Section 35 and 36 are talking about the records, what are all the records have to be produced before the authorities in case of any audits, and also how long the records have to be maintained. 65 and 213 are talking about the audit by the GST authority. There are two kinds of audits were there. One audit were done by a chartered accountant or a cost accountant, which provision has been withdrawn in the last year. Last budget, the finance minister has withdrawn the audit by a chartered accountant because they feel that it is additional burden for the corporates. But there is an audit provision in the law wherein the department can visit the premises of the person and do a detailed thorough checking of the transactions, which has been dealt in 65 and 213. 71 talking about what is the time limit within which the notices are be served. Suppose they are coming for an audit, they cannot just like that come without informing you. 15 days advance notice have to be given. Once the notice is served within 3 months, the audit has to be completed. Rule 2101 again audit provision for the GST officials, and GST AM, that is GST Audit Manual 3, which has been issued by the Directorate of GST authorities for an internal purpose for the officials to go through and what are all the documents they have to check, what is the desk review, what is the document they have to review before they are completing the audit. This is an internal information to a GST authorities. Now, since it's over 5 years now since the inception of the GST, during these 5 years, many hits and trials have been made by the companies or by the professionals. Being a new law and new provisions, there are a lot of errors were committed during the initial period. Lot of experiments were being made and lot of adjustments were made in the return by way of correcting the mistakes happened in the return. Now, after 5 years, almost now the return filing has been streamlined. Now it is the department is very, very aggressive. They wanting to do a audit of the corporate or business entities to check whether any revenue leakages are there or not. We have seen that there are 14 lakh crore has been collected by the department. But do you think that still there will be a revenue leakages? Yes, definitely. There are, even now, there are non-compliances are there. People are not aware of the certain provisions, and the input tax credit have been taken left and right without knowing the eligibility criteria. So still there is a scope for the government to collect more revenue from a GST related taxes. Now the government is very, very aggressive, issuing notices for conducting an audit. And at the time of audit, there are hefty bunch of documents one must submit it with the department for them to verify and then give a clean sheet. In one of our client case, where the GST officers are asking the company to provide all taxable invoices from 2017 till 2022. It goes more than 40,000 pages, but they are not bothered. And now government in one way they are saying that it is a green energy where they have to go green and reduce the manual documentation. But the other side, when the officers are coming, they are keen on collecting the documents, including the invoices, that is the purchase invoice and the sales invoices. So one must be very, very careful when you are with reference to a preservation of the documents. This was a recent news which came in a tweet where in one audit, when the department official has visited, they could able to identify the revenue leakage of 134 crores. So this 14 lakh crore is only the taxes which has been paid by the honest taxpayers. But there are maybe another 30-40% can the government can collect if they really do a audit of these business entities. Now audit, what is the audit and what they will be checking in the audit time, which has been defined in 213 of the CGST Act, wherein they are bound to verify the records and also returns. What is the difference between the returns and records? Returns are generally the monthly return filed for the GST and annual returns. And when I say records, it includes all your ledger copies, trial balance, balance sheet, profit and loss account, annual return and director's report, notes on account, everything they are asking at the time of an audit. So record includes all your financial statement, including the income tax return and also the returns, that is 26 AS. Especially they are very, very keen in collecting the TDS certificates because they wanted to correlate the turnover between the TDS return and the turnover which has been declared in the GST returns. So the records means including both income tax records as well as your financial statements, and returns means all the return which has been filed with the GST authority. Now one beauty is here, this monthly return, annual return, everything is available in the GSTN portal. By click of the button, the officials can take out those details, but they will be asking the client to provide all the physical copies of the return. I do not know how many of you are preserving the monthly return filed through a GSTN portal. We are thinking that the government is providing a cloud base, free cloud base, wherein we are preserving all our monthly return filed and annual return filed. But I request you, all of you, to download those returns and keep a soft copy with you, or take a backup and then keep it with you, because we do not know when the officers will knock at your door. Now, maybe after some time, the government also may delete the data which has been there for the earlier years, because unnecessarily it is also occupying the space and there is no agreement between a government and you that they have to permanently store your data. So as a businessman, it is the responsibility that you have to download those returns and then immediately take a backup and then keep it with you, which will be useful at any future date. And any other document, here they have made it as a any document. Let us see what are all the any other document includes. Maybe in the next slide I will explain. And also it is not only the document which has been specified under the GST authorities, GST law, and also if a businessman is maintaining a record in terms of any other law, like for example, a Companies Act or money laundering law or income tax law, those records are also required for them to verify. Now, any other document is, one is the tax invoice. That's why I told you that in one of our client case, the GST authorities have asked the client to produce all the tax invoices from 2017 till 2022. So preserving this either in the soft form or on the hard copies, you are supposed to keep the records of all the tax invoices raised. And when I say tax invoices, there are certain doubts will be there in the mind whether a company or a businessman can issue a revised invoice or a provisional invoices, whether it is allowed under a GST. See, as far as GST is concerned, there is no revised invoice concept is there. A person cannot issue a revised invoice at all. And also provisional invoice is also not there. Maybe provisional invoice, you can call it as like a quotation. But there is no provisional invoice concept. You can, when you are going to send a goods or a services to the customer, you cannot send the goods with a provisional invoice. You may think that only after the goods are certified by your customer, you can raise the invoice. But as far as the GST is concerned, they say that it is only the concluded transactions in which you can move the goods. Otherwise, it is not possible. So, tax invoice is mandatory for all the goods and services supplied or rendered during the period. The second one is a payment receipt refund voucher. This most of us would not have heard these terms, because we are making an entry into a tally or a software or a ERP, whatever the software you maintain it. But as a document, we don't keep this as a separate item. Payment voucher means wherein if suppose you are going to, like, let us take an example that you have availed services of a transporter, that you wanted to move your goods from your factory to your customer. You have availed the services of your GTA, goods transport agent, to whom you are going to make the payment of a freight. Now on the freight, the GTA will not charge GST, but as a recipient, you are liable to pay GST as a RCM method. Now such cases, when you make the payment to a GTA, you must also issue a receipt called a payment receipt. And receipt and advance receipt and refund vouchers, wherever we receive, sometimes customers are paying you an advance, either for the services or for the goods. So we normally never issue, when I say normally, most of the entities. There are entities who are receiving a advance receipt. When I'm talking about the most of them, many small entities, MSMEs, they don't issue a receipt at the time of receiving an advance from a party. Now GST require the businessman to issue a receipt for advance. Why I'm telling is, in case suppose you are into a work contract, where suppose you are going to engage in a work contract wherein you are going to supply the goods as well as to the service. It is a composite contract. Whenever there is a composite contract, when you receive the advances, if the advance is not very specific, whether it is for the goods or a service, then the department may make you to pay tax at the time of advance also. That is a reason. If the advance is for the goods, there is no necessity to make a tax payment at the time of receipt of advance. Whereas if it is for the service you receive the advances, the tax need to be paid immediately when you receive the advances. You don't need to wait till you render the services. So whenever you are rendering a composite contract, where you are going to provide the supply of goods as well as a service, and if you receive advances, always give a advance receipt, specifically mention that it is towards the goods supply, so that you can escape from payment of a tax at the time of receipt of a advance. Then debit note, credit note. So whenever the invoices have been issued and there is a difference in the price variation, that I have today agreed to sell the goods at 1,000 rupees, and there is at the time of a supply the price raw materials have increased and the customers are willing to give me 1,100, then for the differential amount, either you can issue a debit note or reduction you can issue a credit note. You cannot further issue any invoices for that. So debit note, credit note is also very, very important. Now these debit note, credit note also need to be uploaded in the GSTN portal. It is not only the invoices you are going to upload. The debit note, credit note also required to be uploaded. Depending upon the debit note and credit note, the other person will be required to reverse his input tax credit. And a person who are going to deal with the goods also need to keep the record of all their stocks, movement of a stock. What is the opening stock? What is the stock you have purchased? And what is the sale has been made? And what is the closing stock? Now these stock records have to match with your books of account, should match with your statement submitted with the bank in case you have availed the loan. So all that you need to be very, very careful, especially 31st March stock statement. You ensure that your stock statement figures which are given to the bank are in tallying with your stock statement which are maintained and also been recorded in the balance sheet. And e-way bill and DC, whenever the goods movement is there from one place to another, and the goods, if suppose there are two kinds of movement will be there. For example, interstate, intrastate. Interstate means what? A person who is there in Coimbatore going to sell the goods in a person in Karnataka. That means the Tamil Nadu goods is going to move to another state. So whenever the cross-border change movement is there, and the value is going to be more than 50,000 rupees, then along with the e-way bill. In case the transactions are intra-state, within the state, a person in Tamil Nadu is going, in Chennai is going to sell a goods to a person in Coimbatore within the state, then the value, if it is going to be more than 1 lakh rupees, then e-way bill mandatory. When the DC will be applicable, where you are going to supply a goods which is not a taxable goods, then the delivery challan, like our old regime where we send goods with a delivery challan, you can move the goods. And in case of a export and import, if a person who may also import goods and then use it for a local manufacturing, or a person may also manufacture here in India and then export outside India, there are bunch of documents which are mandatory: shipping bill, bill of entry, all those customs valuation documents, all those documents and also the clearing agent invoices, all that you are supposed to maintain it, and which is again will be asked by the department, either at the time of filing your GST return, all the shipping bill detail need to be uploaded, and at the time of claiming a refund, again shipping bill is become mandatory document. Unless the shipping bill details are given, the refund will not be sanctioned at all. Finally, there is a document called a PO, that is a purchase order. When they come for a visit, they will be asking whether you have any purchase order issued. You have the practice. There are people who issue a purchase order and then subsequently issue a supply the goods and services. There are people without even a oral PO, they will be releasing the goods. And there are parties where they will have a contract entered between the two parties, maybe a supply case. Agreement will be there. All documents also to be preserved along with the other GST documents and need to be produced before the authority for an audit. And when I say the records as per any other law, the records are as specified in the Companies Act or a SEBI or Income Tax Act or LLP or a partnership or a money laundering law. So if a person is required to maintain certain document as per these laws, which also need to be produced before the authorities for their verifications. And from there, what are all the investigation they will do, what are the information they will take it out, and what are all the notices will come, we do not know as of now. Very recently, the audits have been started. So the real litigation will start only from now. So whenever you are finalizing your books of account, spend some time. I have seen many MSMEs, they don't spend time in verifying their books of account. It is not blaming anyone. They fully trust the auditors and then they submit it. It is a duty of the businessman to go through your financial statement and also correspondingly with all other documents submitted with the various other authorities and ensure that everything goes well. Otherwise, there may be unnecessarily we will be inviting a trouble in future period. Now the next question is how long a person need to maintain these records. We have seen so many records: invoice, debit note, credit note, advance voucher, payment voucher, everything we have seen. So how long a person must hold these documents? Now if a person is registered with GST authorities and they are supposed to maintain the records whatever specified now up to 72 months, that means approximately 6 years. 6 years from, the catch point is here, 6 years from the due date for filing of annual return. It is not 6 years from the date of invoice or 6 years from the end of the financial year. It is 6 years will get calculated from the date on which the annual return has been submitted. Now, every businessman need to file the monthly return. Along with that, there is also an annual return has been specified. If a turnover is more than 2 crore, they are supposed to maintain, they are supposed to file an annual return. So this 6-year period will get calculated from the due date. In case some litigation is going on, that somebody has gone on an appeal before any of the authorities for their legal disputes, then they may have to hold the document 1 year from the final disposal of such a appeal, revision or a proceedings or a investigation. Now the next question which may be there in our mind is, when I say due date of annual return, now what was the due date for the 2017? Now for the year 2017, the due date was February 20. So that means from February 20, another 6 years. So till 2016, you are supposed to preserve the document relating to the 17-18. And for the 18-19, the due date for annual return was extended till June 20. So till June 26, you are supposed to maintain the records of 18-19. And 19-20 till 2027. And 2021, it is February 22. So you are supposed to maintain till 2028. And 21-22, as per the original, it is 31st December 22. We may not know whether the government will extend the time this time. If suppose there is going to be an extension, again further 6 years period will get calculated from the extended period. So up to that, one must preserve the documents, and whenever it has been called for, it is the duty of the person to submit it for their verifications. Any doubt so far? Shall we proceed? Okay. Now next we are going to see. Kindly mute, please. So next we are going to see the applicability of GST for a merchant exporter. Now let us first see who is a merchant exporter and then see why concessional rate is being given and what are all. Gopi sir, can you mute everyone please? Yeah. First let us see who is a merchant exporter is and what are the benefits have been given to a merchant exporter and what are all the documents they are supposed to maintain to get the benefit of a concessional rate. Let us take an example. A person, a supplier who is in Chennai, who is a manufacturer, produces a goods in Chennai, and an exporter who is also in Chennai. Now, the exporter is going to place an order with the manufacturer. The transaction between an exporter and a manufacturer is a local transaction. Assuming that I am a service provider and you are going to be my customer, this is a local transaction. Local here meaning it is happening within India. Whenever that rate have to be adopted as per the GST tariff. GST tariff prescribes the tax rate for various goods and services. So when a manufacturer wanting to sell goods to a exporter in Chennai, he is supposed to, assuming that 18% is the tax rate. Since it is a local transaction, 18% tax need to be levied. Now this exporter is going to receive material from you and then export outside the country. Maybe a company which is there in Germany. Now the transaction between an exporter, merchant exporter and the Germany company, it is an export transaction and it is a taxed at 0% because since it is a export and the foreign currency is going to come in, so the government treat this transaction as a 0%. Not only that, when the goods can be exported, the tax cannot be exported. Otherwise, our cost of the goods will be much higher in the global market. We may not be able to compete in the global market. So when you export, you will only export for the basic value. Now see the situation of an exporter. He has to buy material from a local concern. Along with the value, 18% he has to pay. That means his working capital will go out of his hand for to the extent of 1/5. And then he exported. On that there is no tax liability. After exporting it, what he will do? He will go to the department and ask for the refund. This is unnecessarily the time delay will happen. To that extent, the exporter, unless he has a working capital, he cannot venture into this business. So the government came with one scheme. What is the scheme? In case if this is an arrangement, like a merchant exporter wanting to buy goods and as such he wanted to export outside India, he don't need to pay 18%, pay 0.1% just to keep them in the track loop. And then they can export it, provided the exporter and the supplier or need to maintain or fulfill certain conditions. If they are able to satisfy the conditions, then it is allowed for the exporter to procure the material at a concessional rate and then export it so that his working capital will not get affected. Now let us see what are all the conditions one must satisfy. The first condition is the exporter, the merchant exporter must be registered with any of the promotion council like EEPF, FIO, kind of export promotion councils are there and they must be a member of that export promotion council. Then only they are allowed to enter into this kind of transactions. The second one is any merchant exporter wanting to buy material locally and then export it outside, they have to intimate. Whom should they intimate? The exporter need to intimate the supplier, that is manufacturer will have one jurisdiction, GST authority who will be monitoring the manufacturer. That GST authority, he has to report. What he will report? I am going to buy from so and so manufacturer, he is falling under your jurisdiction and I am going to export it. So the intimation need to be given to a GST authority. The whose responsibility? It is not the manufacturer responsibility. It is the person who is buying the goods need to intimate to the supplier's GST authority. Okay, they purchase the material at a concessional rate. They cannot keep it in the godown and sleep. They have to export such goods within 90 days. That is another requirement. Okay, there are some cases where they may have to assemble 2-3 product, aggregate 1 or 2 product, allied product, and then export it, which is allowed. But they have to do all this in the warehouse. Warehouse means whether warehouse is a registered premises of the applicant or warehouse of the government, that is customs warehouse, which has not been defined in the law. That was the point of litigation. Everybody is now facing a problem. They are thinking that warehouse means registered place of the exporter. Now, what is a warehouse? They have not defined in the law. But there are few case laws which I am going to deal in the next slide. Then you will understand the importance of the warehouse where you have to. That is, when you are the manufacturer wanting to supply the goods, he should not deliver it in the exporter's place. He must deliver the goods directly to a port or a warehouse which are there in the port. He cannot because otherwise what will happen is they may also misuse the facility and then locally they may sell the goods. Then what happens is after exporting it, again the exporter's responsibility to provide the shipping bill details that to the jurisdictional officer that I have exported. And also one more point is in the shipping bill also they have to mention specifically from whom he has purchased these goods. That is the manufacturer's GST number and invoice number need to be mentioned in the shipping bill. So what will happen if suppose he is not complying with any of these provisions? He will have to pay the regular tax. Who will have to pay the regular tax? The manufacturer who supply the goods. Now, whose responsibility now to ensure this? When you are going to supply any product at a concessional rate, the manufacturer has to go behind the exporter and ensure that he comply all the provisions. Otherwise, the problem will be for the manufacturer, not for the exporter. You need to be aware of this. Now here, there is a company which is producing this packing material, HTP drums. And what they have done is, this packing material has been manufactured and supplied to a merchant exporter. But this merchant, the supplies were made to a merchant exporter's premises. Those packing materials are supplied in the merchant exporter's premises, not to the port directly. The merchant exporter, after he purchased the drum, he filled the ethyl alcohol and supplied with the goods and the drums and exported outside the country. Now the authorities have denied the benefit of a concessional rate of 0.1% and asked the supplier to pay the highest rate. The reason is that the applicant has submitted that there is a substantial evidences are there for export of the drums outside the country, and without the container, how will the manufacturer fill? The exporter will fill the material inside the packing material. So the concession should be given to a manufacturer, but it has been failed at the official level and went to a advance ruling. There also they said it is not possible and then went into a appellate in Karnataka. They also finally said whenever the concession is given by the government, this you have to keep it in mind. This is where you have to underline and keep it in your mind, that whenever the concession is given by the government with certain conditions to be fulfilled, that it has to be fulfilled at any cost, that you cannot deviate. So since he has supplied the material in the premises of the person, not to the warehouse, the benefit has been denied to a supplier. So this was held in Time Technoplast Limited case in Karnataka, and the benefit of concessional rate of 0.1% has to be denied. So the point you have to keep it in mind here is, whenever you are going to enter into such kind of concessional rate supplies, you have to, as a supplier, ensure that all the conditions given in the notifications have been fulfilled. Else, you will be called to pay the full tax and not the exporter. Once the exporter exports the goods, you cannot catch hold of him. So you need to be very, very careful, or before you entering into a transaction with him, you make a very clear undertaking or an agreement or a contract, specifically give these conditions, and also if possible collect the tax amount and retain it with you until he fulfill all the conditions. In case of non-compliance, you can make use of that amount for payment of a tax. Otherwise, your pocket, you need to pay out of your pocket. So that you need to be very, very careful. The second case study we have is relating to an LUT. Here, a manufacturer of a rice mill machinery is engaged in supplying machineries locally to various parties. During the year, he got some orders from outside country and he exported few machines. But he is not aware of this LUT provision. The LUT means letter of undertaking. As I told you, exporters can send the goods outside the country without charging of a tax. Now, this is again a concession. The concession given by way of 0% tax. Now, for that, two conditions need to be satisfied. The conditions are that a supplier must give an undertaking to the GST authorities, that is actually the address to a President of India, that whatever the goods I am planning to export, I will export within 90 days. The second undertaking what a person is giving, that he will bring back the foreign currency into India, that he has to recover the money from abroad and bring it to India. These are all the two conditions need to be satisfied. If a person is not satisfying these two conditions, again, like in the Technoplast, this person will be liable for paying of a full tax. Now the question here is, this person has exported, proof is there, foreign currency has been brought back, proof is there, but one declaration he failed to file with the authorities. Now the officials, the proper officer has refused the refund for this person. Reason, he has failed to file the LUT. But there is a circular issued by the authorities, circular number 125. Therein they have mentioned this is only a procedural aspects. In case a person has not filed the LUT, and if the substantive document of an export is made available, then the officer can condone the delay of filing of a LUT. But as usual, the proper officer ears and heart will be dumb. They will not listen to the people. So again, the point I am trying to say here is, if you are going to venture into any of the export transactions, ensure that you are filing your LUT. Now let us see when the LUT has to be filed and what is the time limit. Now LUT has to be filed every year. It is not one time like a GST registration. Today you obtain until you close the business, you will have one registration. LUT is a one which need to be filed every year. What is the due date? It has to be submitted on or before 31st March of every year. Suppose a person is only like a rice mill machinery fellow who has been doing only local business. Suddenly he is getting an offer in the month of October or December Before export also he can file the LUT. So the time gap is either end of the financial year or before export. When I say export, suppose you are going to supply goods to a special economic zone which is there in India. Now the supplied SEZ is also treated as a deemed export. Now in case you are going to enter in with the special economic zone, then also LUT is mandatory. Otherwise, the supply to special economic zone will attract the tax, regular tax. Now, what is that you are going to give it in a letter of undertaking? You are going to undertake that you will export the goods and services within 90 days and also undertake to receive the foreign currency. How will you give? It should be in the letterhead of the company. 2 references should be there. Anybody, somebody, a witness should be there in the letter, and which need to be submitted online. This is not a manual submission. This is through an online submission. And in case a department finds somebody has been prosecuted that they are escaped payment of a tax for more than 2.5 lakhs, for them LUT is not permitted. For them bond need to be executed. Now those kind of people have to execute the same undertaking in the stamp paper with 15% bank guarantee also need to be submitted. So 125 circular gives the instruction to the officers to condone the delay in case of genuine reasons. The non-compliances of filing of a LUT will attract a regular tax, and like a rice mill machinery, you may have to suffer, may not be able to get the refund from the department. Shall we proceed? Any doubt is there? Shall we proceed? Okay. So next we are going to see another important burning issue, and most of the exporters, some of the exporters, let me not put most, some of the exporters are not keen in complying with this. The impact is very, very huge. Let us take an example that the Sanco, the leather exporter, has written off a sum of rupee 35 lakhs as a bad debts due to a material rejection. That he is a person who is manufacturing of the leather bags. This is again the real case. Maybe the name alone has been changed. It is from one of my client case, wherein they have exported the goods, but after the goods reached the country where they are not happy with the quality, so they rejected the material. Obviously, when the person is rejecting, he will not make the payment, isn't it? So when you are given a letter of undertaking to the government that you will export the goods and bring back the currency. You have exported, but the goods are not accepted by the authorities. And again, the Sanco were not able to bring back the goods here because the transportation cost, they may have to incur more. So to avoid further loss, they left the goods in the country itself. So this 35 lakhs, they may not be able to recover it. What should they do? They have to obviously write off as a bad debts in their books of account. Now the GST officer has issued a notice trying to levy the tax along with the interest for 35 lakhs. This is the live litigation is going on. We have represented, but the officers level, they are not agreeing. They are only issued a demand notice. Once they issue a demand notice, what is happening is the liability will automatically go sit in your 3B return. It is not that they will issue notice and you can forget about it for some time and then go to them for making payment in the later period. It is not like that. It is like a suda dosa. Today there is a demand raise, automatically your 3B return, the liability ledger will get loaded. So next month when you are trying to file your return, Unless you discharge that tax, you may not be file your further returns. So that was the checkpoint made by the department. Now, after making the payment, we have gone for an appeal. Now, this will very rare chances are there to get a relief. So, the point what I am trying to highlight here is, if you are an exporter, ensure that you are bringing the foreign currency within the time limit prescribed by the FTP, that is RBI. If you are not able to bring the currency within the time limit, maybe due to COVID kind of a situation, the exporter need to approach the commissioner, jurisdictional commissioner, and seeking for an extension of a time. If you are not getting an extension of a time, then your liability to pay taxes arises, and interest also will get added to that liability. So this is another important point one must keep it in mind. So this has been given in rule 96B, which is came into effect from 20th March 20 for the goods exporter. For the service exporter, what will happen? Suppose you are going to render some services, software service or a training service or some service you are going to provide, consultancy service to a person outside the country. After export of a service, you were not able to collect the money. What will happen? For the services, the provision is there since 2017 itself. If a service provider is not able to bring the money within the 1 year from the date of export, he will be liable to pay tax. It is not the loss is only for the consultancy value. The additional 20% also will be added to your loss account. So you need to be very, very careful when you are entering into a export transaction. So service export, another example. Mr. Sam, young salaried IT professional. Now during this COVID, if you see, most of the IT professionals are all doing the dual job, that they will be engaging with a local Indian company, and also they have received a lot of orders from abroad, and they were exporting the software services to them, software solutions to the outside the country. Now here is a person who received, this is again a real situation, where he rendered a software solution to an entity in US, received 53 lakhs as a consideration. Now along with the salary, he added this 53 lakhs, honestly paid income tax, and also declared in his income tax return. Now there is a notice served onto the person and seeking for clarification that he has declared a professional income now of 53 lakhs, which is more than 20 lakh rupees, and they are seeking a clarification whether this person has got a GST number and whether GST return has been submitted or not. Now this Sam is of the view, anyway export is a zero tax. What will happen if I don't register with the department? So it is not the case. The person who is exporting of a service or a goods, when the threshold limit is crossed, 20 lakh or a 40 lakh, whatever it is mandatory for a person to register under the GST. Now, if a person is not registering with the GST, there are penalties prescribed, and that they have to face it. So, which need to be keep it in mind. The next important point we are going to discuss is with reference to a facility provided to an employee. There is a CAD-MAC machinery company, it is a pharma company having 400 employees in their load. As per the Factories Act, they must maintain a canteen facility inside their factory. There is an agreement between a company and the employee, and the contractor, the food supplier is outside, the outside contractors has been engaged. Out of the total food cost, part of it is borne by the employer, part of it is recovered from the employee and then paid to a contractor. Now there was a notice issued to the Cadmac company stating that money whatever you have received from an employee, it is amounting to a supply you have made to an employee by way of providing a food. So on that recovery from an employee, you may have to pay a tax. Now this went before the appellate authority, wherein they have concluded that canteen facilities are not chargeable to tax, which is decided in AAR Gujarat. It is incidental to an employment contract. They are not providing, this is not a chatram where they provide food for every people who are walking into the factory. This is food which is provided as per the compliance for Factories Act, and which is incidental to an employment contract. And no profit margin. The company is not earning any profit out of these transactions. Whatever the contractor charges, which has been borne by the employer and employer at actual, from the recovery from an employee, as such it has been paid to a contractor. So there is no margin. And if no employment contract, there is no obligation for the employer to provide the food. So based on all these facts, the AAR has given a verdict saying that it is not a taxable. The next, there was a latest notification in the last month, April 22, wherein if the supplier is going to have a turnover of more than 20 crore of rupees, they are supposed to issue a e-invoice. What is this e-invoice? They said first initially tax invoice. Now they are saying e-invoice. What is the difference between a tax invoice and an e-invoice? Now is it something different? Whether this invoice is generated from the government portal or it is generated from the company's software. So many confusions are there. Now this e-invoice is actually that a supplier is only generating a tax invoice. After generating of a tax invoice from his software, whatever may be the software, whether ERP, SAP or QuickBooks or Zogo or Tally, those details in the invoice is uploaded in the e-invoice portal. That informations or data in the invoice are uploaded in the e-invoice portal. E-invoice portal, again, it is being maintained by the NTPC. Now, from there, after you give the detail, what will happen is they generate one unique number that is called a IRN number, 64-digit number, along with the QR code. The reason for bringing these people under the e-invoice is it become very transparent. The fake invoices can be identified easily. With a QR code, anyone can scan and then find out the validity of the supply credentials of the supplier and the recipient. So, in one of the cases where supplier has issued a e-invoice after delivery of a material, they have supplied along with the tax invoice, material has been dispatched, and they came to know about this provision only later point, and e-invoice has been generated after the supply is made. Now the question is, when an e-invoice is generated after the tax invoice, now the tax amount there in the invoice, whether the other person, the customer, is entitled to claim a credit or not is the question. For that, we may have to refer to a rule number 48, sub rule 5, which says that if a person is liable to issue a tax invoice, and if he is not issuing a e-invoice such category, will be treated as an invalid invoice. So if an invoice is invalid, the recipient may not be claimed the input tax credit. So what is the point I wanted to highlight here? If anybody is liable for issuing of a e-invoice, always ensure that the e-invoice goes along with the tax invoice. That is, the tax invoice itself, e-invoice number need to be printed. Now this is from a supplier point of view. If you are a recipient, you are going to buy from a material from another supplier, and he is liable for a e-invoice. and he is issuing a normal tax invoice, again you have to inform your supplier to give a e-invoice, otherwise don't accept the material, otherwise you will be denied with the input tax credit. Now the peculiar situation is this person has raised a e-invoice. Somebody has, you can unmute and ask question.
Yes, madam. Actually, on this e-invoice for the claiming of input tax credit,
Yes.
how am I supposed to know that the vendor is 20 crore turnover company, whether this is a tax invoice issuing company or a e-invoice issuing company?
Brilliant question, sir. Brilliant question. That you should have some vendor evaluation mechanism. Okay, and also GST portal also provide the facility, e-invoice portal. If you go www.einvoice1.gov.in, wherein you can identify, just enter the GST number of your supplier and then find out what is their approximate turnover and whether they are registered with the e-invoice portal or not. Those informations are available. It is a free information. The second point, even if you are not able to identify, as a part of vendor evaluation, you have to every year check with your maybe kind of some communication between your supplier and you, ensure that whether his turnover is less than 20 crore or more than 20 crore. That way you can identify this.
Thank you. Thank you.
Thank you. And here is a peculiar situation where supplier has raised a e-invoice, but after 2 days the customer has cancelled the order. Now the beauty is here, once e-invoice is generated, now this is automatically uploaded up to a GST, your regular returns. GST portal also will get uploaded. So whatever the e-invoice uploaded, the value is reflecting in your GSTR monthly return. When you open a GSTR monthly return, this turnover is appearing there. But the order has got cancelled. You wanted to cancel the invoice. E-invoice portal, you cannot cancel beyond 24 hours. You raise today, within 24 hours, if you want to cancel, you can cancel it. Otherwise, it is not possible for you to cancel the e-invoice. Now the question is, since because the e-invoice portal is not permitting, it doesn't mean that I have to pay the taxes to the government, isn't it? So what has happened is, now they have given a clarification. In case e-invoice is not unable to cancel because of the delay in time, and in the GST portal, when you filing a return, there is an amendment facility is there. So there in the GST return portal, you can make a changes, cancel the invoice in the GST portal and then upload it. So with that, in case any query comes in the later point of time, you can also clarify this with the GST authorities, but always keep the communication of the order cancellation with you so that they will be asking for a proof why you have cancelled the order. This is another peculiar situation. Again, it is a live case where the company is an exporter, has filed a refund application with the authority. They have issued the refund immediately after filing of an application. Within a week's time, 2.3 crore was sanctioned. 90% of the total refund amount was sanctioned, got credited. The company is very happy, got a working capital. Okay. Now, after some time, after issuing of the refund, the officers were going through the records. I told you there are various records you have to submit it with the authority, tax invoice, shipping bill, and EGM, and amount, money collected. So many things I told you with reference to a export and input tax credit, whether the input tax creditors appear in the 2B ledger. So many things they are going through it. At that point in time, the officer finds that there is a lacuna in the documents submitted. So what happened is they have rejected this 10% balance 10% refund. Now the the company was saying that it is only a 10%, if I lost, no problem, let me just forego that. But the question is, it is not the question of foregoing. The moment you forego this 10%, then what happens is the government has got the right to recover the original 2.3 crore sanctioned earlier along with the interest. We are able to understand this implication of this rejection of 10%. So whenever the 10% rejection is there, you have to take it very seriously, immediately go for an appeal, file all the required document, and then ensure that the 10% refund is also being sanctioned. In case the 10% is not sanctioned today, tomorrow at any point in time, you may be served with a notice for the 2.3 crore whatever given along with the interest. So this is another important point the exporter must keep it in mind. Very, very serious issue. Most of them are not aware of this. There is one appeal we have recently filed before the authority, because the beauty is now these notices are only there in the portal, GST portal. The mail has not been received. No physical communication is being received from the department. Unless and otherwise your people who are filing the return are aware of these notices frequently on a periodical basis, they have to check the portal. Any notices have been served on you or not. Otherwise, if the time lapsed also there after the order is being given, again you may not even able to go for an appeal also. So need to be very, very careful. Periodically, you should have a system of verifying your portal for any notices or a demand. Then the next one is the Ravanan company purchased goods 5 lakh from Raman Co in the month of April and claimed ITC, but failed to make the payment to Mr. Raman because of a dispute between parties. The account is not settled till April 22. What is the impact of this transaction? That is, you have purchased, you have got the purchase invoice, goods have been received, input is appearing in your 2B ledger, you have claimed the input tax credit, but failed to make the payment to a supplier. What is the impact of this transaction? Now, Section 16(2) proviso of a GST Act, which provides if a person failed to make the payment to a supplier within 180 days, then the person has to reverse all the input. He is not entitled to claim the input tax credit. He must pay back the credit to the government. He is also claiming credit. The other small supplier who's been deprived of receiving the money, then MSME will not survive in the country at all. So for that, the government has made a condition. If anybody want to claim an input tax credit, ensure that you are also making payment to your supplier within the time limit of 180 days. If 180 days time is in lapsed, then you are not entitled to claim a credit. You have to pay back the credit with the interest. Okay, now the typical situation is there is a contract between a supplier and customer. In the contract itself, they say that credit period is 1 year. Then what will happen? That most of these leather industry, if you see, the chemical suppliers will be waiting up to 2 years because they have already loaded so much of margin into that. They can wait till 2 years to get the money from the customers. So if the contract is between a two party for a credit period of 1 year, then actually the law is not saying, it is my personal opinion. They only use a word, a person failed to make the payment. Since a failure, when it will come, failure will come only from the end of the credit period. Since there is a credit period is one year is there, then the 180 days can be claimed, can be calculated from the end of the 1 year, but don't take this as your, this is only a personal view, but the department is only issuing notices, even if the contract is there, and asking the suppliers to make the payment, reverse the credit and pay the interest. Now, yes, Karthik Professor.
Madam, on this point of 180 days payment, if it is not paid by the customer or the buyer,
yes,
how the department will know, or how the buyer themselves will say, I am not paying, so I will pay with interest the input tax credit availed. This is not going to happen. Rather, is there a mechanism for the vendor to communicate to the department that I have not received payment beyond 180 days? In spite of myself paying the GST, the customer has not paid. That kind of a communication, if it is not there with the GST portal, how that possibility of the customer by himself paying the amount with interest will apply? Will not happen.
Super. So there is a provision available in the portal itself, sir, that you can communicate with your supplier within the portal itself. You can send an information whenever you have such kind of parties who have not paid or defaulted in making your payment. You send communication apart from your all your email communication. You also send communication through a GST portal. That between one supplier to another supplier, you can communicate within the portal itself. That you send a message and then make that as a record, so that the other person will immediately make the payment.
Okay, thank you.
Okay, thanks. Now another. I hope I have some time, maybe another 10 minutes. I will take it. Let us see one more. I have made one animation clip. Let us see that.
Hey, RAM has finally fetched the most awaited order yesterday. The value of the order is 8 crore rupees. Be ready, we have to dispatch the material by tomorrow and keep all the documents ready. Ensure the material gets delivered by 4 p.m. Else he will cancel
The video is not visible to us, madam. Sorry.
Video is not visible?
Of the
Yes.
contract.
Sorry, 1 minute. One minute. Now it is visible.
Hey, RAM has finally fetched the most awaited.
Sir, now it is visible.
No,
madam.
Not able to see.
Share the video also.
You have to share the entire screen and then
I will add. 1 minute, please. It's a very interesting video, that's why. 1 minute. Shared. Okay. Now is it?
Yes, it is
Sorry.
visible now.
Thank you.
Thank you.
Hey, RAM has finally fetched the most awaited order yesterday. The value of the order is 8 crore rupees. Be ready, we have to dispatch the material by tomorrow and keep all the documents ready. Ensure the material gets delivered by 4 p.m. Else he will cancel the order and there will be a penalty of 5 lakh rupees towards non-performance of the contract. Tomorrow will be holiday, so please ensure to keep ready all the documents today itself.
Good news, this order is very crucial and helpful for reviving our loan, otherwise, the loan would have become NPA. We will keep all the documents and material ready by today. Madam, today you will receive the advance amount of 2.4 crore which you may use to repay the loan, and partly, you can use it for payment of salary. Hi, we have to dispatch the material to MS Kuber & Co. This is a very important order. After a lot of struggle we were able to get the order, so please keep all the documents ready. Tomorrow morning the transporter shall leave from here and the material must get delivered by 4 p.m. in the evening.
Tomorrow is holiday, so I will keep all the documents ready by today evening itself. Prepare e-invoice and e-waybill. The details of the invoice and transporter are sent to you by mail.
Sir, I have prepared a tax invoice, e-invoice, and e-waybill. You may please proceed further.
Sir, please send the vehicle by this evening itself. We will load all the material and the vehicle must leave early in the morning and tell the driver very clearly that the material should reach customer's place by tomorrow 4 p.m. Else he will return the goods and the order will get cancelled.
Sir, the vehicle has arrived. Shall we start loading the material, sir?
Please take these documents also. Please ensure that all the materials are loaded and documents are handed over to the driver. Ensure that the vehicle leaves early in the morning. Vehicle is caught at the check post. There the GST office finds that the HSN waybill differ from the vehicle is detained and wants to levy a penalty of 1.44 crore equivalent to tax amount.
What to do? We have a very limited time. The goods must be delivered in time, else the customer will definitely reject the order. I cautioned you yesterday. Immediately sack that accountant. We have been struggling to get one order, you people making mistakes in typing and putting all of us in trouble. We don't want such careless people in our company.
The details in the invoice are correct. There is a typo error in HSN code e-waybill. Instead of 4, they have typed 7 in the last digit. I have informed the auditor. She immediately called the office and spoke to him. Finally, after 1 hour of argument and quoting various case law, the officer has released the vehicle. The driver is very good. He drove the vehicle very fast and on the dot he reached the customer place.
Madam, I have told your people on many occasions to integrate the accounting software with the e-invoice portal through API registration, so that data entry errors can be avoided. Upon validation of the invoice, e-invoice and e-waybill will get generated immediately in a fraction of a second, and it can save your time also.
Thank you, madam, for highlighting the same. I will strictly tell my accounts teams to implement the same immediately. Thank you for saving us at the right time.
So, many occasions, due to this data entry error, mismatches between your tax invoice and the e-waybill, many trucks have been detained and the officer levies a penalty which is 200% of the tax amount evaded. So you all know how critical it is to deliver the material in time, and also going before various authorities and High Court to get a writ and other thing is costing a lot. And also it creates unnecessary tension in the mind. So always we have to ensure that there is no data entry error occurs, and as far as possible, try to integrate your accounting software with the e-waybill portal so that the errors can be minimized. Now let us see few provisions relating to e-waybills. Here is a case where a person is an unregistered. Unregistered means he is not supposed to, he has not crossed the threshold limit of a turnover, so he is not registered with the GST authority, and he is moving the goods. But the GST officer has detained the vehicle and estimated the tax liability and also trying to levy a penalty of 200%. Now, what is whether the action taken by the officer is correct? Now, the question is, even an unregistered person, when he is carrying the material, we have to ensure that the goods are carried with a e-waybill, it is a provision is available, or a transporter can create a e-waybill, or your recipient also can create a e-waybill. If you are an unregistered person, tell your customers to create a e-waybill and share it with you, and along with your invoice, that e-waybill can be attached and send it through a transporter, so that these points can be avoided. Not only that, in case if you are going to be a service provider, most of us, 99% of the people do not comply with this provision. If, for example, if you are a service provider, you may carry certain laptop with you. That laptop may be costing more than 50,000 rupees. Be very careful. The service providers also can create a e-waybill whenever you are planning to move to your customer place or to meet other person in the other state. And if you are going to carry certain valuable goods which are there in your books of account, like a laptop or other material which is going to cost more than 50,000 rupees, take a e-waybill along with you. The proper officer may be sitting next to you in the airport, and also he may catch you and levy a penalty. So it is every person who is going to affect the movement of a taxable goods need to create a e-waybill. If an unregistered person is supplying, the other person who is going to receive the material also can create a e-waybill, or a transporter also can create a e-waybill. But as a supplier, we must ensure that our goods are moving with the e-waybill to avoid the penalty consequences. But the department has issued. The error is human. No, so small mistakes can happen here and there. Sometimes the data entry error may happen without unintentionally. People may tend to do small mistakes. Such inadvertent error should be acceptable to the authorities, and for that the department has issued a notification or a circular in which they said 5 errors. They said it can be acceptable. Let us see what are all those errors. Error in 1 or 2 digits of the vehicle number. That when you are generating a e-waybill, you have to give the details of the invoice, details of the recipient, details of the vehicle which is carrying the goods. Supposing any 1 or 2 digit of the vehicle number is been omitted, or data entry error is there, which is acceptable, as long as the content of the e-waybill and the material and the invoice is correct, the officer can accept. There is a spelling mistake of a consignor or a consignee name. That also can be acceptable mistake. Error in PIN code, but address is correct. That is, instead of 92, they make it as a 29. But address is correct of both the consignor and consignee. The officer can accept such error. Error in consignee's address, but locality is correct. The consignee address error, but the locality is correct because this movement of a goods has been on a time-bound basis. It must get delivered. For every 100 kilometers within 1 day, the goods must get delivered. So, the address mismatch should not be made intentionally to avoid the time of delivery. So, if the locality is okay, but there is an error in the address, which are acceptable. If it is made with the intention to avoid the time delivery, then they will not allow you to move the vehicle. The error in 1 or 2 digits of a document number, maybe the document number here meaning invoice number, and error in HSN code, 1 or 2 digit HSN code error is there. First digit of HSN should be correct. You cannot commit a mistake in the first 2 digits. First 2 digits should be correct. the following either 4 or out of 4 or 6, if they are going to commit a small mistake in the subsequent 2-digit number, which are acceptable to the officer. But even then, with the same above errors, the officers are not allowing the vehicle to move. So you need to be very, very careful. That's why I told you, integrate your accounting software with the e-way portal so that these errors can be minimized to a large extent. Then finally, we have come to the last slide where how to handle stereotype questions. Very recently, if you see, most of the people have been served with the notice that they are levying up they are calling for interest payment for delay filing of a return, because initially in 2017 people were not aware of this GST portal mechanism, and they are not aware of the input tax mechanism, and they were not aware of this tax invoice mechanism. So there were a lot of mistakes were happened, and there was a delay submission of a return has happened. But for that, now they are issuing a notice and calling for the interest payment. So interest not paid, this you cannot do anything, because your invoice number, your date of invoice, everything has been uploaded in the system. And also when you are uploading is also available. It is only a click of the button. They can find out by using a AI, they can find out who are all the dealers who have not paid their interest amount. So now recently there are a lot of notices have been served for interest payment. So when you receive the interest payment notice, the first step is you have to check whether you have paid such interest in the subsequent period. Maybe during your filing of your annual return or audit return, your auditor would have suggested you to make this interest payment. If you have made the payment in the subsequent period, you can give an explanation letter. Now again, this explanation letter, you don't need to go to the department. It is through online. You along with the proof of interest paid with the explanation letter, you can upload it in the portal itself. The second kind of a notice which has been served is mismatch of a turnover between your income tax return and GSTR return. GSTR, you have been filing a return every month. You are declaring your turnover, and at the end of the year, you are also filing an income tax return in the another portal. Now the government is comparing your GST return with the income tax return. This is always advisable. Tell your auditor may be doing it, and also as a owner of the business, ensure that your ITR turnover, income tax turnover matches with your GST turnover. In case any difference is there at the time of reconciliation, try to make the payment, otherwise it attracts the interest and penalty in the future point in time. And penalty for non-registration bill, this is many number of notices have been served. How they came to know? Because you are using your HSN and filing your supply, and also recipient number is also uploaded in the system. So GST authorities can sit in their desk and then find out to whom you have supplied and what is the value you have supplied. They have simply calculated the number of entries, and then they multiplied with the penalty amount, issuing notices left, right. Will include one of my customer has received a notice. So these kind of notices are come to need. That's why I'm telling the e-way bill portal, e-invoice portal, your income tax portal, all should have reconciled on a periodical basis. Your accountant or your outsourced person should ensure that this is being done on a periodical basis. Otherwise, this penalty cannot be avoided at all, because here now it is a faceless. You do not know who is sending a notice. At least in the old regime, you know the person. You can go and sit with him and then explain the practical issue why this has been done. Now it is not like that. You cannot find any person who is sending this notice. You do not know whether he is there in Chennai or outside Chennai. That it is a faceless assessment. You can only talk to your system, not to a person. So you need to be more careful with reference to this kind of notices and try to address immediately. Otherwise, it will be confirmed demand and it will get updated in your liability ledger. Then claim of wrong refund. As I have already, the 2.3 crore leather exporter was not able to recover the these export proceeds. So this kind of a wrong refunds also they can issue notice and they can claim back the refund along with the interest. 73, 74, very serious issue. So you need to be very, very careful about it. And mismatch of this is a routine notices means that whatever the input credit you have taken, if it is not matches with your 2A, 2B ledger, they are sending notices and asking you to pay the interest. Now this reconciliation also on a monthly basis, your people have to do it. Otherwise, very difficult. After 2-3 years, you may not even know what input you have claimed and against what invoice. Very difficult to also give a convincing answer to the department. Better on a monthly basis, you have a reconciliation done internally so that these mistakes can be avoided at the end. So we will quickly recall what we have discussed. The benefit one is registration is mandatory when your threshold turnover is crossed. Invoice for taxable and preserve purchase invoice and proof of payment with you for the 7 years. And e-invoice required for more than 20 crore. LUT is mandatory for export and supply to a special economic zone. To be fulfilled in case merchant exporter, that is 0.1%. Soft copies of file. This is one thing I request all of you if you are going to deal with the GST. Ensure that your monthly return 1 annual return soft copies filed or available with you. Take a backup year locker very well. To what time it will be available late when they come for an audit. If you are not able to provide this to clerical errors, payment to supplier within 180 days to avoid ITC reversal. Export proceeds that you are able to get it within the time limit prescribed by RBI. Otherwise, you may tend to liable to pay the taxes for such a supply. Reversal of ineligible credit attract interest amount. Reconcile your income tax turnover and GST turnover on a yearly basis. Claim ineligible credit is temporarily. Thinking that you are claiming some income tax credit, it is only a temporary relief. Like the doctor prescribing crocin for your fever. Find out if it is ineligible, don't touch that. Because later on, at any point in time, where if you are really financially a problem, at that point in time, it will come as a notice. So don't take the ineligible credit as a measure to save taxes. Do monthly reconciliation of 2B and 3B so that any notices can be answered on a timely manner. And apply for a refund within 2 years. If you are an exporter and you have to apply for a refund within 2 years, if you are not able to apply within 2 years, the refund will lapse to the government. You cannot recover the money from the government at all, because these are all time limit bound conditions where nobody can give a waiver for this. So with that, I am concluding my session and all these provisions. And if you could able to inform your either outsourced people or your audit or your employees, and make them to also understand the seriousness of the documentation. And with that, you can doing a business may not be a burden at all. You will enjoy doing a business. So with that, I am concluding my session and I am open for any questions.
Thank you very much, Rajalakshmi. Excellent session. We look for open for questions. Participants, please ask questions.
I'll stop share my screen.
May I ask, sir?
Yeah, please go on. One at a time. Yeah, please go on, Mr. Nagar.
This is Nagarajan. I am a business person. I'm doing tanks manufacturing and water treatment business.
Okay.
Actually, I have two questions regarding sales invoice and the things. If I'm not able to get the payment from a vendor, I mean from my client, is it possible to get that at least my GST amount can be get reversible or something like that? Is any possibilities of filing some things on portal for my against my client to recover the payment or something like that? Is there any chance of the thing?
The government is thinking that recovery of money is your skill. Okay. The government doesn't want to be a partner with that venture. So they give you a credit. Once the tax has been paid, there is no other way unless and otherwise. Unless and otherwise,
Tell me. Sorry, your voice is not audible.
Unless and otherwise, if you are a service provider and your customer says that he is not happy with service, deficiency in service, and for that there is a credit note, then you can reverse the taxes already paid. Otherwise, no other way or means by which you can claim back taxes paid. So that means whenever the customer goes as a bad debt, it is not 100%, it is 120% for you.
Okay, thank you. And one more, how about my vendors? I'm getting the material.
You can legally sue that person.
Okay. See, another thing, I'm getting the materials with the GST pay, but they are in fail of filing the returns. I'm not able to get the credit also for these things.
Again, that's why you should. You are from which state, sir? Tamil Nadu? சகவாசம் சொல்லுவோம் நம்ம ஊர்ல. சகவாசம் வச்சுக்கணும், நல்ல பசங்களோட வச்சுக்கணும்னு. அதே மாதிரி when you are going to have a transaction with other customer or a supplier, you must ensure that the other person is also complying with the law. In case if the person is not filing his return, the loser is it is only you. Government will not stand as a collection agent for us. They will only collect money from us. That's all.
Thank you for the information, ma'am. It was a very nice presentation.
Thank you.
Hello.
Thank you, sir. Thank you.
I'm Karthikeyan Prabhu.
Yes.
Hello.
Tell me, sir.
I have one point which is slightly out of GST purview, but it is a TDS aspect. We are basically a customs broker providing service to exporters and importers, and many a time we are required to pay amount on behalf of the customer, and we raise pure invoices. Pure agent invoice, the vendor, see certain occasion they are having TDS exemptions.
Yes.
Like a multinational company with the DTA exemption, etc. So TDS exemption cases not an issue.
Yes.
In case where TDS is required to be deducted, as a principal agent, we are paying on behalf of the customer. We are paying 100, ensuring the required completed. And when we claim to one of our customer with a supporting document as a pure agent invoice, the customer, as per their auditor's advice, they are deducting 2% on our invoice.
The entire value.
And on our invoice, and they are paying the TDS amount to the actual vendor and us. Some of them are deducting TDS and paying to us, some of them. Some of the customers are paying to us TDS, at least we are getting our money. Some of them are deducting and paying to the actual vendor. And in this case, we are paying, what I would say,
You
We are
can,
only getting
is it,
98%.
yeah, is it possible to
Hmm.
also raise a debit note to your customer so that that 2% you can recover from him for the TDS amount?
No, they are telling no. What the customer is suggesting,
Ah.
you don't pay 100% to the vendor. You only pay 9%.
Okay.
Which process we have now started.
Okay.
But one of the vendor is saying,
Hmm.
if you pay 98%, I will not render the entire service.
Correct.
I will not do the service.
Yes.
He is telling if the direct billing party, direct invoice party is paying by deducting 2%, I accept. If
Correct.
it is a third party payment, %. That is what
actually
they
this is it varies from auditors to auditors, client to client. But actually, if it is a pure reimbursement, they can the customer's invoice will be in name, isn't it? Pure reimbursement, they don't need TDS. To on the safer side, they deduct TDS on the entire value. The one point is that they deduct TDS of 2% in your name. At least you will be able to recover it. Here you are making the payment, they are deducting and crediting in some other PAN number. So in such case, 2% you should only recover it from the other PAN number where TDS has been credited. That you cannot tell the client. No, it is not possible because they have been advised like that because nowadays everybody wanted to be a sale on actually.
No, whether this issue can be discussed among the chartered accountants in your institute
Even
and with the income tax department, and to have a common method where nobody is affected. That kind of a solution can be thought of.
2% join, 3 opinion comes actually. So very difficult to convince people actually, but you have to find a way that so that you can raise a debit note, inform your client and tell them that the TDS has already been credited to you.
What I have now decided is to arm 16A from my customer against for those all the TDS they have deducted to those vendors. I am going to send a communication to all those vendors.
Correct.
Saying that I have paid 100% and you have also got 2%, so you give me back the 2%.
I don't think there will be any difficulty in for them to pay this 2%. Anyway, they are enjoying that 2%, isn't it?
Yeah.
So they
that's what
must
I'm
obviously
planning.
pay to you actually.
Okay.
Correct.
Thank you.
Thank you, sir. Thank you.
Yeah, thank you for an excellent presentation.
Thank you, sir.
Very
Thank
clear and, with all practical examples. It was very nice. I have, madam, one doubt regarding this IT professional case study which you have given. That gentleman, some 33 lakhs. Now he's supposed to have a GST number, right? Because it is exceeding 20 lakhs, no? Per annum.
Correct.
Now, what happens is like this, let's say this person earns 53 lakhs this year. There is no income. I mean, from this external, export. Maybe after 3 years, I think there is one. He gets some 30 lakhs. That's. I mean, it's not a very. A continuous basis is not earning. Once in a while, something drops in his lap, and he does that work. Now, how do we? How do we tackle such cases? Like, he's an employee. Professional.
See, now the GST portal has been very, very flexibly they have created. Wherein, if a person is going to have a nil turnover, like by way of a SMS also they can upload their returns that it is a nil return. So not a burden for the person for taking a registration. Only when there is a transaction has happened, that month he has to file the return, regular return. All other months he can just send SMS that it is a nil return, so that he can comply with the provision easily.
Okay. And suppose after that he stops, let's say.
He can surrender. Yes.
Specific. And another matter, suppose the IT professional, as you said, that if he carries a laptop more than 50,000 rupees,
correct.
Let's say going from Chennai to Hyderabad or Hyderabad to Bangalore or something, which is quite frequent.
Yes.
Then every time he goes with a laptop, he has to carry a e-way bill with him.
Actually, it's yes.
Okay.
If the value is going to be more than 50,000 and if laptop is purchased in the name of the company and they have availed the input tax credit at the time of purchase, it is yes. Because otherwise what happens, like a Mullah Nazuruddin, like where you carry a donkey and then sell it in the other state for a cash and come back. Like that, the government is thinking that there is an illegal transaction will happen by this method. So that is why they don't allow.
Okay. Even though he's bringing it back.
Yes. How do the department knows that you are going to bring it back? You carry a one laptop and then sell it for a cash in the other state and then come back. How will they know?
Thank you very much, madam.
Thank you, sir.
Good morning. One
Yes.
the last discussion. Does it applicable to also the vehicle which is under the name is registered under the company? May say the car. Is it like
Any
what?
movable goods which are coming under the registered, but only for vehicle there is one notification has been given, and they have relaxed it. If vehicle is going for carrying of the goods or carrying of the passenger, and vehicle alone they have exempted it, sir. There is one notification has been given.
All right. Thank you so much for a wonderful presentation.
Yes. Thank you, sir. Thank you.
Participants, you may please unmute and ask your questions, please.
Ma'am, I do have one question.
Yes.
When we are doing this annual return in GST, ma'am,
okay.
Actually there is a system populated for the turnover,
yes.
But it was wrongly showing in that annual return details.
Okay.
But ESTR portal still they have given an option to correct it. But what I'm asking is, see, when we check the GSTR 3B month on month, the value is matching as per turn message is there is a mismatch. So why those things happening, ma'am? Just I mean, is there any concern raised to the GST department?
It is only a facility. What they say is it's a facility. They are just to assimilate all the data from various places, and they are only making it convenient for you to prepare the return. In case you find that there is an error, you are always allowed to modify that, and then you can submit it. Nothing wrong into it.
Okay, but why this annual return is specific for about 2 years? I mean, 2 crore turnover, ma'am. And again,
So
there is a late fee.
initially they said everyone has to file it, but it is for a small people, no less than 2 crore. And it is very difficult for them to again file an annual return, and they have to make a payment to the external people who are facilitating this. It is an additional cost burden for them. The government thought that they wanted to exempt those categories, and more than 2 crore now at present making it as a compulsory for them to file.
Okay. No, what I'm asking is, ma'am, why it is for 2 crores alone? Because anyway, all GST we are doing month on month. So
no,
again,
there
annual
are certain
return,
annual return. Why they are asking you to do annual reconciliation is, I told you that there are differences identified by the department at the end of the year between income tax return and the GST return. Maybe while during monthly return you have omitted certain things. This is another opportunity for you to correct your monthly return errors, and then you can rectify that in the annual return. They are giving you another chance.
Okay. Thank you, ma'am. Thanks a lot. It was a nice presentation.
Thank you, sir. Thank you so much.
The 0.1% which you told for export is a very good information, which I was not aware. It was, but documentation is a huge work, but still it was a good information.
And most of the exporters, they are up to the supply of goods, they will dance to your tune. Once a supply has been made, and very difficult to get even a single document from them. And the one point I have been usually listening is that other auditors are not asking this question, why you are asking this?
Correct.
That
It's
is
it's a it's a big thing, but it's a useful one, but very challenging one to do.
very challenging.
Rather, I would make 18% payment and then get. We are also into services, so we can adjust in that. That
Correct.
will be the easier one for me.
Correct.
Because we have to make even the suppliers to. I mean, we have to go to suppliers justification and then do all these things, which is a big challenge.
Correct. Correct.
But anyway, thanks
Thank you,
for the
sir. Thank
information.
you.
And
Thank
it was
you
a very
for
good
part
one.
of this program.
Madam,
Anyone else has a question, please?
Madam,
Yeah, go on, go on.
Madam, one more question, madam. This is regarding, madam, you said
Yes.
that a businessman, he should update himself with the regular changes which takes place in the e-portal, etc. Now, these changes which take place, including that circular to officers which you had mentioned, now all this is a awareness to the businessman. So is it put all things consolidated at one site, or is it at different sites one has to go and check every time?
No, no. CBEC site is available. It is for everyone, and if anyone can visit anytime and then look for this kind of information. And also, as and when their amendments are coming, now after this COVID, the department is also releasing certain videos.
Okay.
And they have uploaded that in the portal. So you can view that. There are a lot of FAQs have been given. So any doubt is there, you can get it clarified.
Thank you.
Anyone else has a question? You may please unmute and ask, please.
So if there are no questions,
yes, ma'am.
we wind up, sir. So thank you all the participants for patient listening, and I have enjoyed this session. So thank you so much for Gopi sir for giving me this opportunity.
Thank you. Thank you.
Thank you so much.
Thank you. Thank you.